Hello and welcome everyone. You're watching the Budget Show with Business Standard. I'm Kanishka Gupta and I'm joined in by our in-house experts Shubhayan Chakravarti and Dhruvak Shah. In this show, we talk about all things budget, especially what is brewing in the run-up to the budget. Now, in this episode, we'll focus on what the budget may have for India's infrastructure and energy sectors. India has been yearning for rainfall, and we finally got some. But now it seems like our infrastructure wasn't really ready for such a heavy downpour. We saw dramatic visuals of roof collapse at Delhi airport. And before that, we saw 4 bridges have been collapsed in Bihar in just over a week.
Yeah.
So, Dhruvaksh, infrastructure has remained a key focus in previous Modi government budgets. Will it be the same this time? And can we expect something for the safety?
So, Kanishka, we have seen what has happened at the Delhi airport. We've also seen what has been happening with bridges. And it's not a problem that is unique to this year. It keeps happening year after year. And this is largely to do with processes in terms of how these infrastructure projects are sanctioned, in terms of what processes are followed by contractors, and so on and so forth. So, in terms of that, I don't expect that the budget will be able to do much because the budget is largely based on allocations. But yes, it can be expected that following the recent election victory, that the government will now need to look at the process with which it's awarding projects and and the way these projects are being constructed. So, and for that, the government needs to tighten its project sanctioning. The government needs to tighten its project awarding methodology, and the government also needs to take a holistic review of all the projects that have been given so far. In terms of budgetary allocation, I think that the government is expected to continue on the capex momentum that it has been building, because infrastructure has been the cornerstone of the Modi government, even at the cost of social schemes sometimes. Even though economically, a number of economists have said that the way that the government has been going about it, maybe providing capital expenditure as a method of reviving demand in the economy, may not be the correct approach, but electorally it has worked wonders for them, because of course there has been a record number of highway addition, there has been a record number of railway addition. So following the budget, we could see some action in terms of the processes, but in terms of allocations, I expect that the government will continue on its capex momentum.
All right, Shubhayan, what are you hearing about the budget for petroleum and natural gas? And can we expect prices for petrol and diesel to come down any soon?
So I really wish that this budget gives a signal as to when we will see the next rate cut at the petrol pumps. I think back in March, the government had signaled to the three oil marketing companies to go for a rate cut, and prices had reduced both for petrol and diesel by 2 rupees after 30 months. This had come after a prolonged period of conflict in West Asia, as well as the entirety of the war in Ukraine. However, at this point, the main discussion seems to be veering towards whether these three large companies, the three public sector oil marketing companies we have in the country, Indian Oil, Bharat Petroleum, and Hindustan Petroleum, the discussion seems to be moving towards whether it merits to give them access to a large gamut of funds. Last year, the budget had allocated 30,000 crore, a major amount of money for these companies for greening the energy infrastructure, logistics pipeline, and overall meeting our net zero targets till 2047. This time, it seems because these companies are sitting on record amount of net profit over the last 4 consecutive quarters, there is a pushback from the Ministry of Finance to not probably give them that much. Case in point, the interim budget had slashed that fund to 30,000 crore. So we'll have to keep an eye out for that.
Okay, and what about railways, Dhruvaksh? We have seen a series of rail accidents, including the recent one where Kanchenjunga Express collided with one of the goods trains. What should Finance Minister focus this time while allocating for the railways?
Right. So, Kanishka, I will first talk about historically so far in the past few years what the railways has done right in terms of allocations. Significant allocation has been made towards infrastructure expansion, which has been a key concern, because if tracks are congested, it's more likely that you will have accidents. So, the significant amounts have been spent on capacity expansion and track expansion. However, there are certain areas where there is a lot to be desired. Railway unions have alleged in the following the Kanchenjunga train accident that positions in safety cadre of the Indian Railways have not been filled to the extent that they could have been. And in the immediate reaction to that, we can see that the government is seeing signs of discontent among both the general public and railway employees in terms of that. And the reaction from the railways to that was that it immediately tripled the hiring that it was going to do for assistant loco pilots, because the Kanchenjunga train accident, one of the issues that came about in the Kanchenjunga train accident and also the Vijayanagaram train accident that happened last year was that loco pilots are stressed. Loco pilots are stretched thin, and for that there needs to be a number of loco pilots that need to come to the Indian Railways. So the railways did triple that, and so we can expect that safety may be a prominent theme in the upcoming budget, because what has changed between the interim budget and now is that railway safety and in general infrastructure safety has also been something that has dented the popularity of this government, especially given the fact that they pride themselves on being a government that focuses on infrastructure. Now, the other aspect of that is Kavach, which has been, of course, talked about. Kavach is an indigenous train anti-collision system, but the current coverage of Kavach on the Indian railway network is less than 1%. Now, Kavach is a complicated system. It will take some time. What our sources tell us is that it will take a number of years before Kavach is actually there prominently on the Indian railway network. Um, we were also told that the minister has recently also Union Minister Ashwini Vaishnav has recently also pushed for the expediting the implementation of Kavach, but it is likely to take some time. So on that front, the railways can probably look at integrating whatever it has in terms of capacity expansion, hiring in important positions in the safety cadre, hiring extra loco pilots and wherever the staff is necessary, and meanwhile complicated works that can take time, such as Kavach, these are likely to go on. And in terms of allocations, the railways might be looking at a slight hike in its capital expenditure, and that's largely because most of the sectors where railways needs to invest in to become a safer mode of transport are already seeing healthy allocations so far.
Okay, all right. Shubhayan, you also cover telecom. Can you talk about the recently concluded weak telecom spectrum auction and how will that play out in the budget?
The government actually tries to keep a close track of the auctions. The auctions actually make up for a large part of what the government hopes to get back in lieu of as part of non-tax revenue from the telecom sector. So if you remember last time back in 2022 when we had the massive 5G, the first time 5G airwaves were going under the gavel. So back then the government had gotten 1.5 trillion rupee as part of a huge amount of spectrum sales. This time the response has been quite tepid, but in line with what had been expected so far. This time around 11,340 odd crore of spectrum has been sold. However, having said that, it would probably be a bit difficult, I think, even for the government at this point to estimate whether this will impact or potentially bring down the amount of non-tax revenue they hope to recover from the sector, especially because telecom companies currently pay for the spectrum they acquire over a 20-year period. And as you may know, some of the companies, especially the third largest company in the country, Vodafone Idea, they are battling financial issues currently, although they are working their way around it.
All right. And Dhruvaksha, what can we expect on the highway development and private investment front?
Right. So, Kanishka, highway development has been one of the key markers of the government in the past 10 years. And the kind of increases that we saw in capital expenditure for highways especially since COVID, we are looking at something between 33%, 66% hikes in a highway development budget. But that was broadly on two fronts. One was that the government needed to spend capital expenditure to revive demand as an economic measure that it has been trying to do to boost private capital expenditure. And second, that the National Highways Authority of India has also been debt ridden for quite a while. And in fact, the National Highways Authority of India has been told not to go to the market. So in the last two budgets, the NHAI was given zero market borrowings. So that was the context of what was happening in the highway budget so far. This year, this time in the interim budget, we saw a very moderate 2.9 against the revised estimates of the previous fiscal year. We saw 2.9% increase in the budget estimates for this year in the interim budget. Now, I reported last week that the government is expected to raise this amount by between 5 to 10%. Now, that is still moderate compared to what has been happening, but this is where private investment comes in. Private investment in highways on the private side has been there, but the government tries to award these projects on a model where called build, operate, transfer, where highway developers actually undertake the whole risk of the project and build it. Now, in the past, this model had led to an NPA crisis, a banking crisis, and contractors have been extremely wary of this. So the government, just a few months ago, the government has completely rejigged its entire mechanism of awarding highways in the build, operate, transfer model. And there is a pipeline of projects worth 2.2 trillion rupees at this point. And what we understand from sources is that the government will look at a mix of providing a healthy capital expenditure to the highway sector from its own coffers, but also look at reigniting private investments by this rejigged BOT model that it has brought. And broadly, the sector is responding positively to it so far, barring a few minor concerns.
All right. What about investments in the telecom sector?
In the telecom sector, large amounts of the investments have been guided so far over the last couple of years by the performance linked incentive, the production linked incentive scheme. But as of this point, although the scheme for the telecom sector had been one of the earliest to go live, the results of that have been mixed. Case in point, the government currently, the Department of Telecommunications currently is running has an excess of 1,000 crore left in its PLI kitty. So what we have reported on is that the government may be looking to go for maybe looking to bring in PLI 2.0 for the sector. This would be required because at a time when the government is planning to expand our entire stack of 4G and 5G technologies, make them in India, add value to them, and export them across the world, especially to similarly placed economies as well as economies in Africa, where a massive 5G rollout is happening in many countries. So the idea is to tap into those markets. A lot of the equipment we use at home, customer premises equipments, which includes your fiber optic cables, the Wi-Fi routers we have at our homes, a lot of them were not manufactured and still are partially not manufactured in India. The government has been trying to increase the level of domestic value addition in that space. So beyond the PLI, the major companies over here, and there is a large number of MSMEs in this field as well, they are looking to benefit from the Telecom Technology Development Fund. So that may be there.
All right. Now, before we wrap, what is the industry expecting from the budget?
I think, as I was mentioning, the smaller companies in this field, there is something called a Telecom Technology Development Fund. It was initially pegged at just 5% of the Universal Service Obligation fee. It's a massive fund, currently in excess of some 80,000 crore. So, 5% of that is still relatively quite low for a country like ours. I think the industry would be pushing the government to expand that and fulfill the government's initial plan to expand it to 3,000 crore, which will go towards the indigenous development, processing, and manufacturing of telecom equipment at home. Beyond that, the three telecom companies in this country, Vodafone Idea, Bharti Airtel, and Reliance Jio, have been reiterating their demands for the Universal Service Obligation Fund, which is basically comprised of all the taxes they pay the government for the services they run, to come down over a period of time. because the companies feel that there's already a lot of money in the fund and they're still being taxed.
Okay, and anything you want to add to this, Vaksh?
Broadly, the infrastructure sector has been more than happy with the kind of money that the government has been putting in, which obviously goes into the order books of these companies. And they are broadly expecting the capital expenditure momentum to continue. And broadly, in while railways is nationalized, I think in ports and in highways, broadly, the industry is looking at the government to make private investment even more seamless. In ports, it's actually quite active in ports, and in highways, the government is looking to the industry is looking for a more seamless experience for private investment in this sector.
Okay, on that note, we wrap up this episode of the Budget Show with Business Standard. Stay tuned to keep yourself updated with all things budget and more.